So let's get Cameron Brandt in. He's Director of Research at EPFR Global. Cameron, good to have you with us here. Thank you very much. Lots of talk, discussion, chat about, of course, the rally in China is so big in such a short time span. It's a literal shock. So there's a lot of FOMO, I guess, for people who want to chase that higher. And has that led to some serious selling? Just for 2 or 3 days, but large numbers in markets like India. Can you tell us anything, if you've seen that in the flows?
I've certainly seen the flows shift to China at a spectacular level. Flows into both domestic and foreign domiciled China equity funds have soared over the past 2 weeks. And it really has, especially this past week in flow terms, been the only show in town. That said, even though flows into dedicated India funds this week were less than 1% of the flows we saw into dedicated China funds, they were still positive, which I would take from your perspective as a very good sign. Dedicated India funds have seen relentless inflows for well over a year. A lot of investors have built up a lot of exposure to a market that has risen sharply, but the money is still coming even when a very alluring alternative is on offer.
Cameron, hi, great to have you on the show. So what is the sense you're getting? I think the question that a lot of people in India are asking is how long will this continue? It's hard to guess, but this whole sell India, buy China tactically, or even send new money only to China and maybe not to other emerging markets like India. Do you see this trend lasting?
Well, I certainly see appetite for China going for a while. Chinese policymakers have made it very clear that they are paying attention to their equity market, and they want to see it on the rise. Even though flows to India funds have definitely waned, they haven't gone negative, and I think India remains in quite a healthy position. It looks to me, at least from this week, that investors were pulling money out of liquidity funds in Europe to fuel this rotation. And while that, money that might have flowed into India earlier this year clearly took a dog leg, it isn't as much of a straightforward India-China rotation as it might at first appear.
Cameron, is it possible to put some numbers when you say that India dedicated funds, money into the India dedicated funds has waned? What are the numbers that we're looking at, say, for the week gone by versus the prior weeks? And even for China, when it's gone up, what's the extent of the inflows?
So this week, the dedicated China funds we look at took in over $13 billion. A net 107 million flowed into dedicated India funds. But it was, I think, the 70th or 75th consecutive inflow into those dedicated India funds.
So just to get the numbers right, China saw $13 billion of inflows in the week gone by in the China dedicated fund, and India saw 106 million, which marks the 70th or 75th consecutive week of inflows. So there's still a surplus. So
it's still a surplus. It's definitely well below the average you were getting even a few months ago. For much of the second half of last year into this year, I would say the weekly average for dedicated India funds was around $400 to $500 million.
Cameron, so these dedicated funds, country-specific funds, are still very small as a source of money into India. I mean, the last number that I looked at, it's largely emerging market funds, which are the route through which most foreign money comes into India. So could you tell us what's the number, latest number, compared to, say, the average? How much of EM funds taken in?
If you're talking about the diversified global emerging markets funds, They took in about 700 million this week, which is not a particularly eye-catching number, but it's definitely up on the trend towards outflows that we saw for much of the first half of the year. And within those GEM funds, India's allocation, while still not as high as China's, is at a record high. So when they do get money, they're shipping a solid amount of it onto India.
Okay, the money that's flowing into China, Cameron, this $13 billion that's floated in just the last week, is it flowing at the expense of any other market? Just to get a sense of how money is moving, or would it be sort of perhaps fresh money being put to work? Is it coming at the expense of the US or any other market?
Yeah. Well, I think if there's a market it's coming at the expense of, it's Europe. But at least this week, it's more either money being put to work or domestic money, Chinese domestic investors rotating out of other vehicles within their country and moving back to equities. So, if it continues to run, and I think it will run a bit longer, there probably will be some, selling of other markets to fund this trade. But at the moment, there's been enough in liquidity vehicles and enough coming into the market generally, I think, to mute the impact on markets outside of China.